tech sector coming off its best week in almost 2 years. Deal news today with AMD buying server builder ZT Systems for $4.9 billion in cash and stock. It's also the 20th anniversary of Google going public. Stock up more than 7,000% in that time. So what's ahead for that stock and the tech trade from here? Jeffries analyst Brent Thill joins us now. He has a buy rating on Alphabet with a $220 price target. Brent, thanks for being here. If we can, I want to start broad and get your sense on kind of where you think the fate of the rotation trade is from here for the remainder of the year.
It's all been in AI infrastructure. So we think that over the second half of this year that you're going to see money transition from some of the AI infrastructure names to some of the software names. So we still like Microsoft, ServiceNow, and a handful of other names inside software. So we think that rotation starts to begin later in the year, given all these big CapEx cycles that we've seen. We continue to like Google on the antitrust concern. We don't see the company getting broken up or paying a big fee. So we think, again, at almost 12 times EBITDA, it's a pretty cheap story. Amazon's also a top favorite when you think about what's happening with AWS and the advertising opportunity that they have. And that business continues to reaccelerate growth as workloads move to the cloud and AI continues to build momentum. So again, it's been a tale of two cities. It's all been about AI infrastructure, and that's helped fuel outperformance in semis. And we think that this will slowly melt over to the software side. And we think that will have a bigger impact as we go into 25. But we're still fundamentally positive. We continue to see good things ahead for big cap tech. We don't see any big red flags right now, given some of the valuations have pulled back, and we continue to be favorable about the fundamentals.
So CapEx cycle favorable, regulation favorable, valuations even you see as favorable. What about the M&A cycle? And I ask this because, as we mentioned, AMD buying ZT Systems for $5 billion. Do you see this as more of a defensive play for them, an offensive play for them as it pertains to the competitive landscape?
I think M&A is going to boom. And I think we see this later in tech cycles, right? There hasn't really been an IPO market. You've had higher rates. You had a lot of companies that haven't been doing as well. And so we think that there's going to be an M&A boom. You've already seen it in software with a number of acquisitions. We just had another $1.5 billion deal last week that Roper bought in the private market. So we continue to think M&A booms for a number of reasons, partly because there's just too many tech companies. We're seeing the consolidation phase. And we think ultimately you have big balance sheets from a lot of the big cap tech names that want to put money to work. Even a company like IAC has been looking for the last 2 years. They haven't deployed any capital. And investors are like, what are you guys doing? Your job is to deploy capital to do M&A. So it's been really slow. So, you're going to see a boom. As it relates to the deal, I can't really speak to the deal, but I think it speaks to the importance of AI, obviously what AMD is doing. And I think you're going to see a lot more of this. There will be, no doubt, a huge consolidation in AI. There's too many companies going after too few deals. And as we've learned in AI, the companies with big capital, big users, and big data win. And those are literally, you can count them on both their hands, who those winners are going to be. Amazon, Apple, Microsoft, Google.
Speaking of Google, Brent, it's a good day to sort of reflect on the company. We were playing sound of the IPO 20 years ago today. This year, the issues of what AI how it would threaten search, and certainly since Judge Meda's ruling, I wonder if there's more onus on doing some of the parts analysis if a breakup, really does happen one day.
Yeah, we don't think a breakup happens or a big fee based on our regulatory experts. But if it did, it'd actually be good for investors, because if you look at the sum of the parts, when you break Google up, you break Amazon up, the sum of the parts is greater than the whole right now. And we think, again, we published a note last week that shows the sum of the parts and breaking that apart. Again, we don't think that happens based on what we've heard. There will be changes potentially in the way that they go about their business, but we don't see a breakup.